Thank you, Moomoo, for sponsoring this video. If you guys want 10 free stocks worth up to $2,000 each, you can sign up for Moomoo using the links below in the description or pinned comment section, up to $20,000 in total value. But let's get right into it. So, has the S&P 500 bottomed? Has the crypto markets bottomed? We are going to be looking at different data points, different technical analysis, as well as some of the news that we are seeing in the current markets to come up with an idea of what is going on. So, if you guys enjoy this content, drop a like on the video. It greatly helps out the channel, and then subscribe to the channel if y'all are new. And with that being said, let's just jump right into it. So here we have the S&P 500 weekly chart. We've got market cipher up here. We also have Lux algorithm, which is not currently showing there on the chart. We'll just use market cipher for now. So what you can see is this lower band is the 200 EMA. It's a range, right, where the 200 EMA lies, and that is typically where the S&P 500 bounces if there is not a huge bear market, right? If there's not some type of financial crisis like the dot-com bubble back here in 2000 or the 2008 subprime mortgage crisis, right? What you typically also see with market crashes is elevated volume. You can just see how crazy the volume was back here in 2008 during that subprime mortgage crash. You can also see how crazy the volume was during the 2020 COVID-19 pandemic crash. Capitulation, right? What's crazy about the COVID-19 capitulation compared to like maybe the 2008 financial crisis is that there was no buildup. This was just an immediate hit. Boom. I believe it went about minus 30%. We can confirm that 35% in the S&P 500 over the matter of about a month. And that was just instant capitulation because the entire economy is getting shut down. We did not get that this time. We did see some elevated volume over here through February to about July. That's where we saw a majority of this bearish action. But since then, we're seeing some more bullish pressure. And as you can see, I mean, this green means go dot on market cipher June 27th on the weekly chart kind of marked the bottom to some extent, at least over the last few months. I mean, June was almost 3 months ago at this point, and that was a good signal. I mean, we are up from that point, so good job, market cipher. Typically, when you're on these weekly time frames, the longer time frames, you get those green dots on the oversold side. It's usually a good time to buy, unless, of course, there's a financial crisis. So we go back to 2008 as the reference, right? And there was that financial crisis. Now, what was characterized by 2008, and a lot of people showed the same chart in 2022, is if we zoom in, you can see that there was this very nice bear market rally from the bottom. It hit two times double bottom on that 200 EMA ribbon. Then it jumped up to 15% on a 15% rally right there. So if we're just looking at the same thing right here, it bounces off of this 200 EMA, and it had a very solid rally. If we pull out that ruler, we can see, boom, about 18%. So stronger than it was in 2008. Now, everyone likes to compare the two charts because similar bear market rallies, and then after 2008, it turned into capitulation. However, 2008, there was a mortgage crisis, right? There were hedge funds that went under, all of that, right? So there was actual financial crisis. There was actual huge institutions defaulting on their loans, losing an F ton of money. We're not seeing that in the current market. We have seen capitulation, which is what you see right here in 2008, after it goes past the 200 EMA, right? And these are Ripster EMA ribbons, if you guys want to use the same thing on TradingView. But you saw in 2008, once it crossed over this 200 EMA, that's when it really saw capitulation because it's characterized by elevated volume. That's what you want to be looking for capitulation. There's always going to be elevated volume when people are trying to sell off the stock. Everyone buys in gradually over the course of years, and then when there's the scare of a market crash, everyone tries to sell. I mean, COVID 2020 is the perfect example of that. Everyone's scared shitless, and it just sells off 35%, right? So that's what capitulation is. And we're not seeing that high volume. If anything, the highest volume was February through about May to June, July, like that area of the year, first half of the year, not even like in January, but that's the elevated volume we've seen. And a lot of people were expecting right here on this little red dot weekly chart, and just the fact that there's decreasing green money flow. On most charts, this is pretty bearish, right? Because it's just decreasing, right? It looks like the bullish trend is coming down. But what we haven't seen is a financial crisis. What we do have is midterms within the next month or so, or in November. So that's going to lead to bullish pressure. The Democratic Party, if they want to maintain the House, they want to maintain the Senate, they're probably going to try to keep the stock market up, right? Because people like it when their 401ks, their Roth IRAs, and whatnot stay at elevated levels. And also we have things like CPI that's coming in well under expectations. If we're looking at not well under expectations, but lower than it has been in the past. If we're looking at USO, for example, which represents essentially gas prices, which is the United States Oil Fund, you can see it's down in the dumps. But it did come up this today, and this is what I do want to talk about, because in December, I think the markets could get more sketchy. I think there is a catalyst to bring up the markets or at least hold up the markets until about November, until those midterms. But after those midterm elections, I do think it's fair game. And this is because of oil mostly, because oil is one of the largest drivers of inflation. If we actually go to the BLS, you can see that energy makes up a huge portion of the major categories, about 32.9% of the total category. So if oil, one of the highest used energy consumption methods, goes up in value, that's not good for inflation. That puts more pressure on the Federal Reserve to raise interest rates, right? They're more likely to do that that 1 basis point, or that 100 basis point hike, instead of the 75 or the 50 basis point if oil starts going up. So this is a big chart to watch, USO right here. And there was actually news today yesterday, where Janet Yellen said, who is the U.S. Treasury Secretary, that we could experience a spike up in gas prices in the winter because there is an energy crisis in Europe currently. And they're going to be cutting back on buying Russian oil, which means that they are going to be buying American oil or other countries' oil. It basically just lowers the supply of oil, right? And if you got a supply and demand curve, you lower supply, you get a higher price. Same thing if you raise demand, right? Lower supply, higher price, raise demand. That's why we're seeing a spike up in U.S. oil as of today. I don't think that this rally will sustain because it's just pricing in that news of Janet Yellen. However, we get into November, we get into December, oil markets could start picking up again, right? And that is what will be sketchy. But up until that point, I don't really see what could happen with the S&P 500. The one wild card that could potentially happen is a Chinese invasion of Taiwan. However, China is not necessarily notorious for their military action. It's not necessarily something I want to bet on. Other people have differing opinions, but I don't necessarily think that's going to affect the market. If it does happen, China invades Taiwan, game over. We're back to 360 and potentially even more. But up until midterms, I really don't see too much that is bearish. And if we're just looking at some more speculative assets, we can move into the stock market. Most speculative asset, well, not most speculative, but an index of speculative assets, and that is ARK Innovation, which has also seen a pretty nice bottom. And it's got a really good chart. Like I have to admit it. If we're looking at the low of the COVID-19 pandemic, and that's the COVID-19 crash, the same capitulation that we were talking about in S&P 500, we're actually close to the demand zone over there. So the trend has been for like the past year or so, since January of 2021, since the GameStop short squeeze, to short ARK investment, right? To short them, right? They even created a firm called SARK to just short ARK, right? But lately, You've been seeing pretty much the opposite thing happen, right? SARK was mooning for quite some time, but now it's in a downtrend. And this is quite literally a downtrend. I mean, we'll look at that here on Market Cypher as well. But what we're seeing on ARK is a bottoming chart. You're getting it deep in the red on Market Cypher, which is where you want to be buying something if you're going in for the long term. And you're also seeing green RSI right there. Then the next thing that you want to be looking at, if you are looking at Market Cypher, is you want to see some divergence. Now, this isn't necessarily divergence, but the indicator is in fact pointing up, because the green dots are made when the VWAP crosses over right here. So right here got one. That's that yellow region. This is a confusing indicator, but just understand that green dots mean that's where momentum can flip from bearish to bullish. So it got a green dot back here in February. Got another one right here. It's about to print another tiny green dot over here. And that would mean that there's a big blue wave, smaller blue wave, and that could be a trigger for a nice run. And we've seen this many times over and over, and it's also in that macro demand zone right now. So some of the riskier assets are really starting to see a bottom, right? I mean, we are literally seeing the first higher low in ARK investment in such a long time. So it's really kind of changing things up, because instead of seeing the capitulation that you would have expected after that bear market rally, you're actually seeing things get bought right back up and charts starting to look pretty solid overall. And that's what's kind of changing up convictions here, right? And if you're looking at the volume, right, we're going back to volume, we're going back to capitulation on ARK Innovation. You can see that the volume has actually gone up, and it saw its highest values when it was crashing from 117 to about 42, right? So it crashed over 50%. This was from November of 2021, so the end of 2021 to about the end of June 2022. We've talked about this time frame many times. This is the time frame that it took for S&P 500 to come down. But you didn't see that much elevated volume in S&P 500, right? That's what you are seeing in ARK Innovation. And you're also seeing a much larger crash. We can move into something like Bitcoin, and you'll see the exact same thing that you're seeing in ARK, right? You are seeing more or less a bottoming chart, right? RSI flipped green, big blue wave, smaller blue wave, two green dots on the weekly chart. Elevated volume, right? Elevated volume. Now, this was mostly in July, but many times the elevated volume is actually capitulation, and that can mark a bottom, right? So there are some bottom signals being thrown around the entire market. And I'm going to get into a theory about capitulation, why we haven't really seen it in SPY, mostly because there hasn't been a financial crisis yet, right? That's why we haven't seen it in SPY. Speculative assets that don't really have any value, it's easier to capitulate those, such as Bitcoin, such as NFTs, such as ARK Investment. That's why we're going over this right now. But elevated volume typically can be a good buying opportunity. On this dip right here, on May 17th, the week of May 17th, it dipped all the way under 30,000 for Bitcoin, about a 50% dip in about a week on Bitcoin. Insanity. But that was also one of the lowest points that Bitcoin was before it started going right back up, right? So these elevated volume places, like it was right now in Bitcoin last week, could be a good time to buy. Under the 200 EMA, could be a good time to buy. Increasing red money flow, again, could be a good time to buy. Not financial advice. I'm just saying it could be a good time to buy. Let's look at other times where there was elevated volume in Bitcoin. Oh, look, back here, the bottom of 2018, bear market. You can see there was elevated volume. Oh, how about right here, the dip before the rip, March 2020, COVID-19 pandemic. It was a nice dip, and then it ripped to new all-time highs. Elevated volume. Same thing right here, what we are experiencing right now. Elevated volume, actually the largest volume that we have ever seen on Bitcoin. Absolutely remarkable, right? So what this means, in my opinion, and again, not financial advice, is that we've seen capitulation in the bubble stocks, in the NFTs, in the cryptos, in the ARK innovations. but we're not seeing it in the S&P 500 because there simply hasn't been a financial crisis. And I'm not trying to argue that stocks in the S&P 500 are overvalued or undervalued. I mean, I do think that they're pretty overvalued, and most of these stocks, even like most of these tech stocks, are still just not going to give you the right risk to reward for a long-term investment. But there hasn't been a reason to sell, right? There hasn't been a reason for capitulation, the same way that there was in 2008 when there was the subprime mortgage crisis, the same way that there was in 2020 when there was the COVID-19 pandemic. Right now, we have midterms, which could be a bullish catalyst. And the only real thing that I can see causing some type of capitulation is potentially, China invading Taiwan. And this also leads back into the Russia-Ukraine war, right? Because the Russia-Ukraine war caused a ton of selling pressure. Now, this was mostly back here in February, right? Leading up to the Russian invasion of Ukraine, the market was selling off a ton. It came right back up the day they invaded Ukraine. It was a crazy buy the dip situation. Hard to explain. But with that, Russia and Ukraine tensions are also easing up. Not easing up, but Ukraine is gaining back territories. I don't know. Here's the news. Ukrainian forces recapturing some seized territories. So there's more reasons to be buying SPY than necessarily to be selling SPY. Just from a news perspective, from a narrative perspective, not necessarily from a fundamental perspective, because again, I'm still in the boat that I don't necessarily think these valuations are worth what they say they are. But I've also been thinking that for years. I've been thinking that since probably like 2017, 2016, right? And the market has still been going up. So it is a narrative-driven market, and the narrative right now just seems like a bottoming market. And I think in December, it could start to get ugly. If China invades Taiwan, it could get ugly. But until then, I really don't know what's going to really crash this thing. And I'm not saying to just go in and, just send all your money into stocks right now because it's going to start going up like crazy. But what I am saying, without giving financial advice, is that if you want to start dollar cost averaging in to some very high conviction long-term stocks, you can do that right now, and you can probably forget about it, and it might be I don't want to give financial advice, right? But it might be a good choice, right? It might be a good choice. So that's what I'm going to start doing, right? I'm going to start dollar cost averaging in to stocks that I have a very high conviction for the long term. Not going to get too speculative yet. There might be a comeback in some speculative stocks. I'm going to try not to FOMO that, but good tech stocks, good EV stocks, good EV charging infrastructure stocks, stuff like that. That's what I'm looking at. If you guys want to see what I'm buying, what I'm selling, you can join Hootmoney Trade Alerts with the first link in the description, first link in the pinned comment section. You'll never miss a beat on what I am doing. But with that being said, that's about it. Check out Moomoo as well if you guys want 10 free stocks worth up to $2,000 each. Hootmoney is signing off for now. Thank you guys for watching. If you made it to the end of the video, thank you guys so much. I'll see you guys next time. Peace out. Have a wonderful day.